Aloha and welcome to your webinar. This is how to maximize your positive cash flow and net worth with the tax-free cash growth warehouse strategy, brought to you by SCFSIC.
Did you know there is a way to maximize your positive cash flow and net worth that doesn't include taking on additional jobs or require risking your money in investments?
The problem is that 99% of the population, well, all right, let's be generous and say 95% of the population has never heard of this method. That's because the people who use the method aren't in the business of teaching it and really have no interest in doing so, except of course to their own families. Like the Rockefellers, Rothschilds, Kennedys, J.P. Morgan, for instance, and many more. Notice anything in common associated with those names?
Great financial success leads to mind.
Yeah, exactly. And to the great disservice of the population at large, those who are in the position and have the tools to teach this strategy, for the most part, have no interest in sharing it. I'll get back to that point later. Here's what you need to know right now. This method or strategy we're about to share with you has been proven to be one of, if not the most successful strategy for maximizing positive cash flow and net worth over the last 200 years.
It has a positive track record like no other. You may want to know what qualifies us to teach this maximizing cash flow and net worth webinar.
My name is Stan Cox. I'm founder and principal broker and strategist with SC Finance Strategies and Insurance Consultants, and author of the books Tax-Free Cash Growth Warehouse, The 178-Year-Old Secret, and Tax-Free Cash Growth Warehouse, Nuts and Bolts, Infinite Banking in Action.
My name is Amanda Cox. I am a senior strategist with SC Finance Strategies and Insurance Consultants, and we are the founders of and principal educators with Hawaii Financial Freethinkers Academy, a nonprofit financial education organization.
Here's what one client had to say just a year and a half after I helped her with her finance strategy.
She wrote, "Stan, I wanted to share with you that I am ever so glad I met you and my money is out of my tax guy's hands, who is playing stocks roulette with my hard-earned money. The recovery, if there ever is a recovery from this last correction, could have never come in my remaining living years had I kept my money with him. Thank you, Stan, for showing up on the right time at the right place. I imagine the clients you have and listened to you and joined your services are very glad as well."
Another client who became a client just 2.5 years ago and is a real estate investor has realized a 13% gain over just the last 2 years in her safe money fund that she leverages to finance her real estate investments. That gain happened while at the same time she was actually using the money to renovate properties that she later sold for more profit.
In my previous career as a fine art photographer, being as I was an independent one-man business, I didn't have any kind of retirement plan. I had a pretty fair income and my overhead was not that high. Then of course the digital revolution, age of the selfie happened, and my client base and my income began to dwindle. I found myself in need of a better way, a strategy to maximize my positive cash flow and net worth. I got recruited into the finance industry and dove in. I researched and studied, and lo and behold, I discovered a hidden gem, an ancient secret finance strategy. I researched and studied more and more and became an expert in this secret strategy. My wife and I began applying the method to our personal finances, and immediately the advantages became apparent, and our finances gained a new, robust health that was previously unknown to us. As we incorporated the method in our personal finances and I began helping clients with the strategy, I saw how certain other finance strategies could be integrated to great effect. The tax-free cash growth warehouse strategy was born.
You know the fables. The pot of gold at the end of the rainbow, the goose that laid golden eggs, the farmer who grew an apple tree that produced apples of solid gold.
Sure, in those stories, the gold or money never runs out. No matter how much the farmer spends, there's always another golden egg or another gold apple. And wouldn't that be awesome?
Can you imagine that? You spend the money you have, and there would always be more.
Well, I'm not going to tell you that I found the goose that lays the golden eggs. But let me give you an illustration here that is accurate in explaining the mechanics of the strategy. And you decide just how close to real the golden goose is. Now, I'm sure I've explained this 1,000 times to clients in words only. And very few are able to really grasp it the first time through. So I'm going to use some illustrations along with the explanation, and hopefully they will help to make the main points more understandable.
If you have a savings account and you have $1,000 in it, you withdraw $500 and go buy groceries and a couple little treats for the family. Now your savings account has only $500 in it. You bring the groceries and treats home and everybody is happy and there's food to eat. That's a common experience, and everyone can relate to that, right? Okay, now let's change it up just a little bit. Okay, you have $1,000 in a savings account, but this time you aren't going to withdraw $500 to buy stuff. You leverage your account for $500. You still get to buy the groceries and treats, but this way your savings account actually grows. So you have more than the $1,000 you started with, and you and your family are still happy and have food to eat.
So what do you think? Almost as good as the goose that laid the golden eggs, right? Now it's time to explain a few things.
But first, let me ask you, would you rather continue to do the things the old way, where you withdraw money, spend it, and it's gone? Or would you rather be able to leverage your savings for the money to buy things and have your savings continue to grow? I hope you can see that by leveraging your savings while it continues to grow is both maximizing your positive cash flow and your net worth.
Obviously, bank savings accounts aren't growing anything for anyone. Average interest rate for bank savings accounts are less than 1%. Even if you do get a 1% or possibly even a 1.5% APR on the highest paying accounts, the IRS is going to come in and take around 28% of that, and the bank will charge you every time you make a withdrawal for statement fees and really anything else they can justify. Most likely, you end up backwards with any bank savings account. When you add in inflation, you really are losing money with your bank savings accounts.
So clearly, the savings accounts we refer to in connection with this strategy are not bank savings accounts.
No, the savings accounts that we refer to are with mutual companies that guarantee a minimum of 4% APR and pay dividends on top of that. Current dividend interest with our favorite mutual company is 6.2%.
And that dividend interest is tax-free. Do it right and you will never have to pay tax on the gains in your account.
All right.
You want to know where you can get one of these high-interest savings accounts that let you leverage your savings while it grows your net worth and maximizes your positive cash flow.
And what we call the tax-free cash growth warehouse accounts. These accounts are very specially designed and optimized, high cash value, whole life living whole life insurance accounts, and we refer to them as whole life living accounts because they are designed to generate maximum cash value growth and utilization now and in the long term. Okay, let us explain why, besides the high interest and guaranteed growth, that we use these high cash value whole life living accounts. First, there's two things to remember.
The design of the account and the company that holds the accounts are critical to the success of the strategy.
I know that for many, the idea of life insurance seems completely off topic as far as maximizing positive cash flow and net worth.
But that's really because so few really understand the magnificence of the asset that high cash value whole life insurance truly is.
Remember I said earlier on that this method is a secret strategy practiced by the financially successful who aren't interested in teaching it to others outside their own families. So here are some of the most spectacular advantages this vehicle provides.
First, there's the guaranteed high dividend interest of the cash value.
The fact that the gains in cash value are completely tax-free.
The cash value in these accounts are totally protected. No one and no thing can access or attach the cash value. Not bill collectors, not lawsuits, not bankruptcies, not even the IRS. Only the owner of the account can access the cash value.
You, the owner, have complete access to the cash value anytime for any reason.
Your access is tax-free and penalty-free.
You can leverage the cash value to finance things you buy with no interruption of the growth of the cash value.
And yes, there is a huge tax-free monetary benefit to your beneficiaries when you die.
So what do we mean when we say to leverage rather than withdraw from our account?
In this case, the process is to take a loan from the providing company that our account is with, using our cash value as collateral. All that is involved in taking a leveraged loan is to make a phone call to the company or your representative, or you can even initiate the loan via your personal account webpage. You don't need to give a reason for the loan. There are no credit checks, and you don't even sign an agreement to repay the loan.
The loan will be processed within 1 business day, and you will have either a check or a direct deposit into your bank account within 3 to 5 business days. And if it doesn't get much simpler or easier than that.
Of course, since this leveraged loan is a loan, the provider company does charge interest for the loan. But unlike most any other personal loan, the interest is simple interest applied on the anniversary of the loan, and the loan interest rate is just 5%.
Now, remember, currently the dividend interest paid to your account is 6.2% compounding interest. That means that even if you leverage the entire amount of your cash value or tax-free cash growth warehouse, you would still come out 1.2% ahead of the game.
So let's look at an example here. Let's say the household income is $5,000 a month net after income tax, Social Security, health insurance, all the withholding. And let's say there's a regular monthly cost of living of $4,800, including mortgage or rent, food, utilities, insurance premiums, transportation, everything. These are known figures. Now let's say the cash value of your whole life policy is $6,000. It's a very simple matter to take a policy loan. And you can borrow up to about 95% of your total cash value. You either call your servicing agent or call the home office client services and request a loan for the specified amount. In this case, it would be $4,800, as that is the known total of monthly expenses. Typically, you will receive the check and amount of your loan within a couple of days, or you can have it deposited directly into your bank account. You take the check to your local bank, deposit it into your checking account. Now, you go ahead and write checks to pay the bills, buy food, and whatever else is included in those known expenses.
If you get paid twice a month, upon receiving your first paycheck of the following month, after you've taken the policy loan, call your agent or the home office client service line and instruct them to debit the amount of your paycheck from your checking account and apply it to your policy loan as a payment. When you receive your second paycheck of the month, you do the same thing. Call and have the balance of the loan paid off.
The following day, you call again. This time you request another policy loan for $4,800. Rinse and repeat, as the saying goes. Now, let's take a closer look at what has happened to your cash value account and how this strategy has benefited you. If the policy loan interest rate is 5%, annual simple interest, which it is as of this webinar, the interest on the first loan would be just $20 for 1 month because you paid it off within a month of taking the loan. But wait a minute, you paid $2,500 of it off in just 2 weeks. So the interest for the first 2 weeks is just $10. Then there's only a $2,300 balance remaining for the rest of the month. Interest on that amount is just $4.79. Total policy loan interest for the 1 month paid back in this manner is just $14.79. During that same time, 1 month period, your $6,000 of cash value was earning the 6.2% dividend interest, which is the current dividend interest rate as of this webinar, unaffected by the policy loan. Therefore, your cash value grew by $31. Now, minus the $14.79 policy loan interest you incurred and paid, you profited $16.21.
How is that an advantage over just putting your paycheck in the bank and writing checks to pay for your monthly expenses?
Well, first of all, you have your money working for you in 2 ways at the same time. With your money in the TFCGW account, it gained a net $16.21 when you would have otherwise just paid out for bills and that you would not have made any money on at all without using this strategy. Does money sitting in a checking account earn any interest at all?
No.
Do you recover any of the money you pay out for monthly expenses?
No.
But that's not all, because in fact there's opportunity cost when you pay anything in cash. In this case, it would be 6.2% on the $4,800 of monthly expenses, or $25 is the opportunity cost. Comparing the 2 scenarios side by side, on the face of it, you only gain $16 with the TFCGW strategy. But hey, some gain is better than no gain, and a lot better than a loss, right? So by utilizing the TFCGW strategy, you save the opportunity cost of $25, money you would have otherwise lost.
So really, you come out ahead by $41 for the month, $25 opportunity cost saved, plus $16 actual net gain equals $41. Extending that out over a year, you gain $192 in actual net gain by means of the dividend interest you earned. And you saved $300 in opportunity cost. That's a total advantage of nearly $500 for the year over just paying your monthly expenses directly. How cool is that?
That's pretty cool. Actually, it's better than that, because you see, the dividend interest is paid on the balance of your account, not just the net gains. So, since your account actually grew by $31, not just the $16 net amount, and because the dividend interest is compounding going forward, you're earning that 6.2% on the gross balance of the cash value, which is compounding. So the actual gains for the year will be more like $382 plus the $300 saved in opportunity cost equals $682.
Now, when you compare that to the $57,600 you paid out for bills and would be completely gone without using this strategy, and how much ahead in dollars are you now? $58,200 for the year.
Additionally, the preferred way to apply this strategy is to plan ahead for its use and to build in a scheduled paid up additions, or PUA, which will speed up the cash value growth while it also adds to the face value or death benefit of the policy. We don't want to dump an information overload here on you, but I do go into this particular strategy in detail in my book, Tax-Free Cash Growth Warehouse, Nuts and Bolts, along with 9 additional practical applications. So if you want, you can get the books on Amazon.com. Typically, the way we design these accounts for this strategy, at least 60% of the premiums paid go into the cash value right away. And by the 5th year, more money is going into the cash value of a policy than is being paid in premiums. From that point forward, the cash value grows significantly more than what is being paid in premiums.
This is all due to the dividend interest being paid to the account by the insurance provider. And that is why it is essential to establish a policy with a mutual company, and that the policy is based on participating whole life.
Specially designed with riders that maximize the cash value. Remember, we said earlier that design and the company are critical to maximizing the value of the account and strategy. Within those parameters, 100% of any PUA paid into the account goes directly into the cash value, while it simultaneously purchases additional life insurance without causing an increase in the base premium.
When all these provisions are utilized, the miracle of compounding interest kicks in and the cash value grows like a wildfire.
Now, we have a nephew that has a mind like a steel trap. When I explained this strategy to him, that steel trap slammed shut at the idea of borrowing your own money.
We now have a short video addressing this particular issue and why it's a good thing to borrow money from yourself.
Right here, I'd just like to present it this way. If you have a choice to put your money into a savings account where it'll grow at a high compounding interest, and you can still use it to buy the things you buy, or you can just spend the money and it's gone, and you suffer the opportunity cost as well. Which choice do you prefer?
It's a no-brainer, right? We hope that given this information, you can clearly see how this tax-free cash growth warehouse account and strategy will maximize your positive cash flow and net worth.
As I mentioned, if you want to get more information and see 10 practical examples of this strategy detailed, you can get my books on the tax-free cash growth warehouse at Amazon.com for $15.95 each. We also have a YouTube channel where we have several videos answering frequently asked questions about this strategy. We encourage you to check that out and subscribe to the account.
Now, we'd like to invite you to become our client. While we are super busy helping our existing clients and with our teaching programs through the Hawaii Financial Freethinkers Academy, we are making room for a few new clients who have taken the action and initiative to watch this webinar.
So here's what you need to do. click on the link in the description box below. Watch our TFCGW webinar, How to Become Master of Your Financial World. It's 62 minutes.
And at the end of the webinar, you will be directed to where you can fill out an application to become our client. When you do that, we will contact you for an initial consultation.
We work with a large team of experts all across the country. Our specialty is the TFCGW account design and strategy, but our team consists of experts in every area of finance. When you become our client, you will have access to the wealth of knowledge and expertise of all those professionals.
And as we said, we're very busy as it is, but we are motivated to help as many people as we can with this TFCGW strategy. It's too good not to share, and it's a darn shame that there aren't a whole lot more people teaching and using this strategy for their advantage.
So we're going to make this opportunity even richer for you. If, after you watch our TFCGW webinar and you submit the application to become our client, and we agree to work with you, I will provide a comprehensive cash flow analysis for you, absolutely free.
This is a $499 value, free to you.
I will also create an illustration of a custom designed TFCGW account specifically for you. Again, free of charge.
And that's another $100 value.
And when you become our client, we will give you absolutely free electronic copies of my TFCGW books.
That's another $32 value. As part of our service to our clients, we make ourselves available to answer questions and coach you as you get going with your personal tax-free cash growth warehouse and strategy.
That's right. We aren't the type to just get you started and then disappear and let you tread the unknown waters by yourself in the cold. No. If we accept you as our client, you will have our entire team behind you to help you to gain the maximum advantage of the beautiful attributes of the TFCGW strategy and maximize your positive cash flow and net worth.
As a reminder, we are only able to take on a few more clients. As much as we'd like to help everyone, there are only so many hours in the day, and we are only human after all. So don't put it off. You've come this far.
Take the next step and watch the TFCGW webinar at the link below. Complete the application to become our client and submit it. We'll take it from there. We are here for you. We look forward to talking with you soon. Aloha and mahalo for watching.